Hello everyone and welcome to Investing Angles, to our Market Waves daily analysis. Today we have a huge agenda. First of all, we'll discuss volatility. After that, we will touch point on major US indices, including S&P 500, Dow Jones, Russell, and Nasdaq. After that, we will have a look at the major S&P 500 sectors and some very large stocks, the biggest contributors to S&P 500. After that, we will have a look at Elliott Wave's perspective for S&P 500 and Nasdaq. A special feature today is Pfizer. We'll have a look at the long and mid-term perspectives and evaluate the path that the stock might take. After that, we will discuss gold. We'll see what is happening right now at the micro level, and the final feature of our presentation today would be Bitcoin. All right, before we get started, please make sure to subscribe to our channel, support us with your likes, and follow us on different media like, for example, Twitter. Okay, so this is the candle map for Volatility Index right now. So what we are seeing here, we have two strong bearish candles. Technically, the next one has better chances to be bearish. However, I would like to mention that the candle today found support at three lines at the same time. So it's 8 and 20 and 100 days moving averages. So perhaps it's not significant, but this is something that we need to keep in mind. Speaking about the 3-day frame, which is closing tomorrow, so this candle is for now neutral bearish, but it needs to go much lower in order to flip this trend, because right now what we are seeing is 8 by 20 EMA. Moving averages, they are crossing and technically crossed today, and another one that is looming is 50 over 200 periods moving average. Technically this is 3 days, so this would be 150 over 600, which is way significant. And an interesting thing here that while the price action is moving down, technicals indicators are moving and curling up, and this is quite an interesting point. So something is not known here, and the chances for a big spike are fairly significant. So that's we'll keep an eye on this. Now let's move on to our indices. So what we have here, 2 green days, everything looks fine, and the price moved above major support lines, and everything looks nice. However, if we look at the 2-day frame, for example, which also closed today, this is a totally different picture, especially for SPY. This is the first one, SPY and Dow Jones. What we are seeing here is that the candle stopped right at the closing level of the previous candle, and making on neck pattern, which is technically considered bearish continuation. So unless we have a very strong reversal and very strong bullish move over the next 2 days, so this the odds on a 2-day frame are bearish, and the same is happening for Dow Jones. For Nasdaq, it's a bit different story. So we have a huge bearish engulfing here, the red candle, and we have 3 candles that were trying to negate this. So far, they are not successful, but the chances for another red candle and over the next another green candle for over the next 2 days are here, and we need to watch for it. So far, this is a good attempt to form a bottom, but a bigger move is required. So for IWM, it's inconclusive, and we need to see another candle. So far, this is slightly bullish, chances for moving higher. Now let's have a look at the futures. This is the closure today, and it's a bit concerning, I would say. The daily closure. So what we have for S&P 500 futures. So this is a huge hanging man. The same happened for Dow Jones. Nasdaq made a similar one, but not as strong as the other two with red head. And similar, the green one for happened for Russell futures. So the chances are fairly bearish, and especially if we consider that this one we have a fresh MACD bearish cross. The chances for a move lower tomorrow are fairly significant, and so far futures are minus 0.3, but it's we know it's not very reliable. We need to see how they survive overnight. Okay, so that's the candles perspective. We are very cautious about it, and the chances for bears are fairly equal to the chances for bulls. This is the interesting chart. We've discussed it multiple times already. This is the futures 10-day S&P 500 futures 10-day frame. What we are seeing here is a MACD cross, bearish cross, and so far it is expanding. And we don't know yet whether this is going to be this cross or this one. So far it looks like it's going to be the first one. However, for this one, for the first one to happen, the next couple of days must have a very strong rally in order to reverse it. If the cross is not reversed, then we will consider the second point. But if the cross is reversed, then it will open a path for another couple of periods, maybe 2 to 6 periods of increasing prices, maybe 300 points S&P would be adding. This is a very similar technical condition to what happened in September, October 2021. Well, that's something that we are monitoring. Let's move on to the next chart. This is our, okay, so let's have a look at this one first. So this is our long-term perspective for S&P 500, and the green path remains on the table. And this is potential for wave 3 to start. So we had starting in August 2024, we had wave 1, 2, 3, 4, and this is potentially wave 1, 2 of a bigger wave 5, which will take the index till the end of July, August, sometime this range. However, this big move here made an all-time high, and there is a possibility that this was wave 5. This everything that we had for wave 5, and it is comparable by size to wave 0 to wave 1. And now we have to consider this option 2. So if S&P fails to launch a rally here, then the red path would become primary, and particularly this level would be crucial for closing. If the price crosses this level, well, then the red path is most likely going to be prime. And now if we have a look at the smaller chart, so we have potentially an impulse here. It's still not clear because of the gap. Then wave up, or potentially either B or 2, and another possible impulse down, again with the gap. So far, this wave upward looks corrective because of this overlap that happened last night. And we charted this path. So far, everything remains on track. We are looking for this possibility, but if the wave develops into a diagonal of a bigger size and continues on, especially above this level, then we would consider the green path from the previous chart. Okay, so that's the options, and now let's have a look at the sectors, what they told us today. Yesterday, everything was green and nice and bullish. However, today, I would say that sector closed with rather disappointing candles. First of all, the financial, it moved below the support line, and technically right now it's neutral. It's neutral pending confirmation for either path. The same thing happened with industrial, and it formed a bit more concerning doji. XLK technology is trying to form a bottom. However, if you look at, let's say, for a 2-day frame, we can see that the 2-day move wasn't even able to engulf the previous candle, the red one, and right now it needs a much stronger move in the next 2 days in order to register a reversal here. So that's a concerning part. And now we are seeing that two candles in a row are trading below the 100 days moving average, which is a separate concern. XLP, instead of forming another green candle and fix this bottom, it formed a bearish Harami candle, and with the chances of move lower. And particularly this happened below the 200 days moving average, which is the red line. And it looks like the 50-day is going to cross the red one, and that's gonna be a bearish cross. An interesting thing is happening with healthcare. So 2 days ago we had a bearish cross, big death cross. It's 100 over 200 days moving average. And so far, these candles are neutral. They need a confirmation for either path. Utilities are leaning bearish, but nothing super conclusive. And the same for consumer discretionary. Energy, it had a chance to form a tower bottom here, but it failed by a couple of basis points. Actually, we'll see how it goes from here. So the chances are 50-50, but I would say in the long run, bears might succeed. Now let's have a look at the bigger stocks. So nothing impressive for Microsoft. It's tried to form a bottom yesterday, but today's candle effectively canceled this event. So the chances are still on the table, but not so much. Amazon is doing well. Apple formed a bullish engulfing, and the same happened for Tesla. So the chances, if they have a good confirmation tomorrow, solid green candles, well, we might say that this was a bottom, at least a local, a small one. NVDA is trying to form a bottom. So far, 1-2 steps. I would like to see stronger moves. So if we look at the 2-day frame, it is an on neck pattern, which is technically a bearish continuation pattern. So I would say that the chances for bears are still significant, and they are very well equipped with for the next move. Google looks bullish, nothing interesting here, and Netflix, it looks like it is recovering. Let's see if it goes above this red candle. So it needs to close above red candle. It had a chance today, but was pushed back. That's a bit of concern, but well, we need to see a real end of it. Okay, so that's for the big candles, for the big stocks. Now let's move on to the feature of the day, Pfizer. So what is happening with this particular stock? I'd like to say this is the daily frame, daily closure, and Pfizer. It looks like it made a turn, and it's going down. The similar happened for the monthly frame. It closed January with a bearish candle, and these two are the January and December one. They most likely are consolidation phase before moving lower. And speaking about Pfizer, this was our chart that we made back in February 2023, which is 2 years ago, and this was the original chart. And those who believed when Pfizer was 43, now Pfizer is below 26, and it's exactly in this target area. Last year we made a little adjustment here, and we said that Pfizer is probably gonna land somewhere between 22 and 14, and so far the stock is on track. This is the time where we made the last update for Pfizer. So far nothing to change, and now I'd like to return to this first to the first chart, and this is what we are seeing right now. So potentially Pfizer made a very nice bearish flag, and this would be the flag target. And now I'd like to put these 2287, 2160. So this is the ideal target for the flag. And if we look at the chart and the next at this one, so it's very much aligned with the perspective that we called a year ago, over a year ago. All right, so that's for Pfizer, and now a little introduction to our website, investingangles.com. We cover a lot of information, a lot of indices, commodities, currencies, treasuries, stock library, and our special feature is a live trade, swing live trade room, where we trade S&P 500, SPY, and SH, well, with the videos and the Discord room. Just a few minutes ago, we posted the Bitcoin monthly update. You can have a look there. And we are offering a free reader subscription for everyone who wants to read our free occasional articles. And we are celebrating 5 years this year, and our marketing team might have something very, very special for those who decide to join as readers. Okay, now let's move on to Nasdaq. So this is our Nasdaq perspective. Let's have a look at the candles first. These are the daily, 2-day, and weekly candles so far. What we are seeing on a daily frame, we had a huge red candle on Monday, January 27, and so far Nasdaq has been struggling 1, 2, 3, 4, 5, 6 candles, trying to negate this huge bearish move, and it's been already one attempt to break through this gap, and it's been rejected in a classical fashion. Right now Nasdaq is probably it will try another one, probably, most likely, but we are yet to see this to happen. So the 2-day frame closed yesterday with a big bearish candle, and today we had an attempt to negate it. So the candle is closing, the current candle is closing tomorrow, and we will see what will happen. And from the weekly perspective, we had a bearish candle on the weekly, and it's inside down. So far it is attempting to negate it. We'll have a look how what it does on Friday. And now let's move on to Nasdaq charts. So this is potentially the bigger picture. So we had possibly wave B, and an impulse down, corrective wave 2, an impulse down, and so far Nasdaq is forming what I can see is a zigzag here. So far this wave doesn't look very impulsive, so it has more corrected qualities than impulsive ones, but there is still a chance. The wave is still young, and we need to get more data about it. So, but if it moves above this line, it still has a chance to form a bigger wave 2. But if it moves above the top of this wave B, then most likely this green path will open the path to higher highs. And Another thing that I wanted to talk about Nasdaq, it's somewhat similar. We already discussed for S&P 500. So Nasdaq is technically making the same pattern that it did in 2020 and 2021 from MACD perspective. So far, MACD is expanding and it is falling. If it doesn't reverse right here, right now, and the closure is in 3 days, technically on Friday. If by Friday Nasdaq doesn't reverse this, well, the next week could be brutal. Okay, that's everything about Nasdaq. Now let's move on to gold. What we are seeing here, an interesting pattern right now. So the last wave, this is the three-minute chart, but it gives you a very good idea of what is happening right now. So what we can consider this as a wave 1, 2, let's say 3, and wave 4, and now where is wave 5? This is the question. And what we are seeing here is, if we look at wave 1 particularly, this is a clear that this wave is not impulsive. So it's either the first wave of a diagonal or it's a corrective outright. So the chance then in this case, all this wave that is gold is working right now could be an ending diagonal for the last move. And this is something that we have to be aware. And I'm talking about this particular possible diagonal. So this could be this one, and this could be this one. So it's in this case it's a non-overlapping ending diagonal. But again, we need to see how it goes. So if there is a chance that this wave is technically it's broken, if the impulse is broken here, and it could go a little higher and make something like this, for example, like another ending diagonal here. Well, that's something to watch, and tune up to our channel where we cover all this information. And the final feature of today's presentation of today's waves is Bitcoin. So what we are seeing here, that's the most interesting, I would say. Let's talk about 3 different aspects of it. First of all, we had most likely 3 black crowds on the daily chart, and it was an attempt to cancel it and form a bullish engulfing. But it looks like this attempt is going to be canceled again by bears, and we have 3 minutes 10 seconds to close. This is going to be a dark cloud cover, or if it pushes a little lower here, well, it's going to be a bearish engulfing. In both cases, this is a strong bearish formation, and I'd like to emphasize this is a freshly made 8x20 EMA bearish cross, and right now Bitcoin is losing 50-day moving average support for the second time in the last 3 days. And the next one, it's got support here. This is the 100 days moving average. The next support will be here, and we will see how it reacts to this candle tomorrow. What we also discussed a couple of days ago on February 2nd, this is the potential, and we shared this information on our Twitter account, also Investing Angles. This is the potential double top, and if Bitcoin already tested the neckline here, and if it goes here down, that would be the minimal target for the double top move. And the chances right now are significant, I would say, especially after today's closure. And another one I would like to talk about, this one. This is the weekly frame for Bitcoin. And I'm opening all technical indicators here, and particularly I'm interested in this one. So this is MACD, and you can see that right now it's just what, 99, 54. It's 45 points away from crossing this line, which was here, here, and here multiple times. So every time this cross happens, Bitcoin loses big. And those of you who've been with us since 2021 might remember this amazing call when everyone and their smart fridge and smart watch were talking about Bitcoin to 150K. We said, nah, that's gonna be a top, and this was charted in April 17, 2021. We called this one, and if you remember correctly, Bitcoin moved towards 30K, and after a little bounce, I think it moved even lower. But this is what we are seeing right now, and this is Bitcoin is on the verge of recording this huge weekly MACD bearish cross. So most likely it will happen this week, at most next week, and well, just be prepared. And one more data point. So we in April 2021, when Bitcoin made this cross, it lost 55.7% peak to through, and right now, if Bitcoin makes somewhat similar move, like 50-55%, it might find its support somewhere here between 100 and 200 days moving averages, and it will move. It's difficult to forecast the timing, but I would say that probably over the next couple of quarters or faster, we will see some drastic moves by Bitcoin. All right, so that's all what I want to say today. We had a huge agenda. Support our channel with your likes, subscriptions. Check our website, investingangles.com, and what we offer there, a free reader subscription, is a good starter for those who want to evaluate our services. And as I said, our marketing team is preparing a big surprise for those who join us for the first time. Thank you very much for watching. Have a great day and happy trading, everyone.